morning. Guten Morgen, comment how are you? Welcome to Forex.Today, the YouTube community of thousands and 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 even more, many more thousands than that, foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone, your past performance, good or bad, not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. All right. Here we are. And I need to bring up the chat. Where's the chat? There it is. There he is. So we have a new link to the new live stream, Squawk News. Headline News Radar, compliments of traders.com. There it is. And it'll be running all week, reading all the headlines to you in real time, giving you a real-time calendar, and giving you technical trade patterns. Yeah, it's easily worth $100 a month. It's free for you. Wasn't free for me, so please use it. So at Forex.Today, we use TRADARS.com, radars for traders. We have fundamental radars, technical radars, volatility radars, the headline news radars. I have something that I'm going to release to you very soon, which is a sentiment radar. Some of you have already seen it, a sentiment radar. Right? So this other radar that you saw reads the headline news and has a calendar so you get the results of news releases. The sentiment one reads the articles and analyzes the articles for bullishness or bearishness and the tone of the article. So it'll look and say, well, you know, when we discuss pound dollar, well, there's 17 articles in 6 different news sources all talking about pound dollar, and they're all generally bearish or bullish. Wouldn't that be neat? I don't even know where it is. Sentiment, is it a product? I guess it's probably a product. Sentiment? Oh, I got one. Yeah, here it is. Oh, and I don't have permission. I am just a mere mortal. But anyways, we built it, so it's kind of cool. So we got all these radars for you. Yeah. So you can fully automate all the grunt work. Like, for example, the sentiment one that I just explained to you. Explain to me, Lucy. The sentiment one that I just outlined reads articles all day and analyzes them, organizes them, and then puts them into an aggregate of how the market feels about the major assets we trade. So instead of you spending hours per day reading and organizing all these articles from dozens of different sources, instead you've automated that. Yeah. Instead of watching the news all day like CNBC, you've just automated it and you just get little headlines. So while you trade, you're always informed. It's fully automated. How about your fundamentals? Fully automated. Technicals, fully automated. The one thing we can't do for you is execution. So you're going to need an ECN. Don't use anything but an ECN. Only use an ECN. Okay? Only use an ECN. So I like Trader's Way. You should check them out. Been working with them for 10 years or so, maybe even longer. Okay, cool. Check them out. It's a good place to start. Yeah, do your due diligence. So I solved that problem for you. Here's a trustworthy, ethical foreign exchange broker. Good. Check them out. Good service provider. Wouldn't it be neat, though, if you also had somebody that could fund you? Similar to a prop firm, but better than a prop firm. Wouldn't that be interesting? Yeah. Well, I got some things moving and shaking for you. So anyways, tradersway.com, traders.com. Perfect combo. There is no reason for you to trade like an amateur anymore. There's no reason. You're making that choice. Okay? You need to be competitive. This is like a competitive sport. How about 5 hours of performance coaching every day to ensure you're always at, peak performance? Yeah, that's what we do. Okay, Bitcoin got to, I think, touched 106, didn't it? So here we are at 104, still doing fine. Dollar slightly weak. It was 107 earlier today. S&P 500 just opened now. Ding, 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 ding. Gold, okay. Oil, back up. It was lower than this earlier. Interesting. Back to 71. Caught a bid. Interesting. And I guess this is better. 4.37. Ouch! Now, it looks like yields are down, but ouch! It was 4.17. What? 2 weeks ago? 3 weeks ago? Yeah. Yep. So I'm not going to go through all this stuff because I've already done this. It's 7 o'clock in the morning. The fundamental trading team at traders.com has met, and we've gone through all the fundamentals. So if you just think about that, like when you go to positioning and you look at the commitment to traders report, we spent a good half an hour reviewing and talking about how to read these numbers and how to interpret them and what they mean. And like, if you haven't done it yet, you're already behind. You're not competing. Maybe you think you are, but you're not. Also, we have a Bank of Japan meeting this week. We have a Bank of England meeting this week. We have a Fed meeting this week. And we've already analyzed everything out months into advance. So if you don't know what's going to happen this week at the Bank of Japan, and you don't know what's going to happen at the next meeting at the Bank of Japan, then you're not competitive. You're weak. Hey, don't get pissy with me. You should stand up. You should be competitive. You should be the smartest trader in the room, or at least 1% smarter than the trader on the other side of your trade, right? So I'm trying to motivate you with some, good old bitch slapping. Okay? Sometimes I need to be your drill instructor and not your friend. You're like, it's $300 a month. Yeah, that's cheap. You want to run a business, but you ain't got $300? Like, oh my God, it's cheap. I think if you tried to replicate anything a little bit similar to traders.com back when I started 20 years ago, $3,000 wouldn't be enough. My charts were $300 a month. Spreads were like 12 pips on pound yen. Yeah. So now you have all this infrastructure as a foundation for your trading business. You need to devour your capabilities, right? By bringing in the best technology because it's so cheap. So anyways, we got a busy calendar. A lot's already happened. Today, we have some PMI data coming out in just a few minutes. So if we have the squawk, do we have the squawk on? Maybe I should have my squawk on. I don't have the squawk on. All right, let's turn the squawk on. Because that'll come out soon. What was that, about 10 minutes? Hua? Okay. Tomorrow, huge day, retail sales in the United States of America. That is massive. Then Wednesday, the Fed meeting, massive. But we don't care about what's going to happen because we already know. What we care about is what's going to happen in the future, so I'm going to download and read the summary of economic projections, because that's how the Wayne do. Okay, yeah. Then later on Wednesday, around midnight typically, you get the Bank of Japan interest rate policy. I already know what it's going to be. And I already know what the next one's going to be. The question is, do you? Well, it's right here under fundamentals. Yep. Then, if things couldn't get busier, the next day we have the Bank of England interest rate decision. Then, in case you're bored, we have United States GDP. And then, on Friday, PCE. Oh. Holy smokes. Then, on Monday, I think I said I'm going to do my morning live streams. I think I said that. And then that's it. No afternoon stuff. No live stream Christmas Eve. No live stream Christmas Day. No live stream Boxing Day. Google it, America. No live stream Friday. I'm with my family that day. Then we go to Monday the 30th. Yes, live streams, regular day. Well, morning ones. Probably again, no, right? Morning ones. And then closed. Operations are closed on the 31st. Operations are closed the 1st. Then the 2nd will be a regular day, including the swing trading. So it'll be morning and afternoon. And regular day Friday, where you spend the morning trading and then the evening at the Friday night monster truck show. I'm sorry, Daniel. There isn't. Yeah, I'm just sorry there isn't. That's all. I mean, I don't mean anything by it. Yeah. The whole thing is designed so that I don't have to redo it 4 times a year. I'm trying to, yeah. So it'll save me thousands of dollars of my time. Unfortunately, that'll leave you out. But I'm sorry. I got to be judicious with my time. I'm just going crazy. So I already did all this, so I'm not going to do that for you. You should have been there this morning. You'd be informed. You'd be, I don't know, in touch. All right, so we can do some some technicals. Okay. But here's the thing. If you haven't gone through like the risk gauges,
Kiwi dollar, US dollar price. Forecast trades at make or a break near 0.57.
Canada Finance Minister Chrystia Freeland resigns from cabinet. Mark Carney next.
All right. If you don't know the fundamentals, like if you haven't gone through the risk gauges, the scatter plot, so on and so forth, you don't know the context of any of these technicals, so you're already left behind. So log in and review it or watch the recording of my webinar this morning. Abdul says, can we expect a recession? It's $50, I'll tell you. And I'll tell you how I got to the conclusion, but more importantly, how the market will behave. I'm more interested in how the market will behave than, like, let's say we have 2 quarters of negative GDP. I'm more interested in, is the stock market going up or down? Is the dollar going up or down? Emerald, I've had that plotted on a chart for over 6 months, Emerald. So again, every member of traders.com knows all of this already, Emerald. We have it plotted out. The Bank of Japan has told us. I've pulled the data out of the Bank of Japan. So we already know that. Yeah. I'm telling you guys, this is the most important thing you could be doing in your trading career is becoming a subscriber of traders.com to get the best tools and the performance coaching so that like you know all of this. It's plotted. And there's no guesswork. There's no algorithms that are predicting the future. This is all stuff that's known. These are known knowns. So what I'm saying is if you don't know this, you're the weakest link. When you play poker, you walk into the room, you look at everyone sitting around the table, and you have to figure out who the sucker is. And if you can't figure that out, you're the sucker, right? So like, we know this. We've known it for months. Months. Like, end of summer, I think, right? August, September, October, November. We already have it plotted that Wednesday night or Thursday morning is a pause by the Bank of Japan. We already know. And the next one, I can tell you whether they're going to raise or cut or hold. And I can also tell you by how much. Why? The Bank of Japan told us months ago. So I'm just like, dude, people debate this on TV, but they're master debaters. I don't debate. I have facts, and yeah, sometimes the facts change because that's how the world works. Things change. But it's not like we're guessing. We actually listen to the central bank. Yeah. Yes, Daniel, no, in fact, the outlook has nothing to do with Investor Bootcamp. It's part of traders.com. Yeah. So you don't have to be a member of Investor Bootcamp and no, yeah. And you don't have to be a subscriber to any of the membership levels at traders.com either. Yeah, it's $50 for 4 meetings throughout the year. So that's one way to stay informed. And you'll learn a lot, right? Because I always start my outlooks every year by logging directly, into the Fed and pulling data out. That data that may or may not even be inside of traders.com. I go directly into the database at the Fed and I take you through charts that I generate. And we can discuss all of them so you get like this global outlook, this national outlook of where we've been, right? So you know where we're standing on the map. And then the outlook is like where the various scenarios of where I think we're going to go on the map. Now we're talking about destinations and the path that we choose to take. And then we will also discuss the threats to that path. And I also will explain how do I get to these opinions. And again, I don't like guessing. So what I often do is look at analogous scenarios that have happened in the past. Past performance does predict future results, but very often it rhymes. Right? So I can just say, okay, let's look at what is likely to happen when Trump raises tariffs. And then I'll tell you how I made that decision. So it's sort of like a mini Harvard, right? We're going to work on case studies. What do you think, guys? Right? So what is that? $12? Was that $12 per meeting?
United States S&P Global Manufacturing PMI came in at 48.3, below expectations 49.4 in December.
There we go. We got our results.
United States S&P Global Services PMI registered at 58.5 above expectations, 55.7 in December. Crude oil pairs back earlier incurred losses and turns nearly flat on Monday.
Kiwi dollar US dollar price. Forecast trades at make or a break near 0.57 euro.
Canada Finance Minister Chrystia Freeland resigns from cabinet. Mark Carney next.
BOJ rate hike in focus. U.S. dollar, yen, pound, yen, technical analysis. New York Manufacturing Index pulls back more than expected in December.
Oil prices retreat on
right
Chinese data. Fed meeting looms.
Mexican peso's upside attempts remain capped below the 20-war level.
U.S. dollar yen price. Forecast soars past 154 more, ignoring upbeat Japanese data.
It's interesting, my voice stumbles on numbers, huh? What do you say, 20 level? That's funny. I'm not very smart, so I guess I'll have to teach myself. Anyway, it's neat technology. I hope you guys appreciate that. You know, like, think of this thing I'm offering to you for free on YouTube. I probably could have bought us a used car for that kind of money. So that means I want you to use it. Would you please use it? Otherwise, I'll just feel stupid that I built this for you and you don't give a crap. Yeah. Use it or lose it, baby. All right, so let's go in here. And I have this set. So if you go to settings, I have this set for trending. Oh, let's put all the commodities on. Trending and reversals. That's what I have set up here. Okay. And I don't love breakout patterns, but well, let's throw some of there and let's see what happens today. Okay. I hope you are using this tool to save you time. I hope you do it every day. Okay? Think of it this way. Can you look at every currency pair, every commodity? I shouldn't say every because there's no platinum or copper, but let's just say of all the major assets that are traded, stock indices, even individual stocks, the major cryptos, the major Forex pairs and cross pairs. And then you have to look at all time frames. And then you have to look for the top 20 most reliable patterns. How long would it take you to actually do that? Pull up every pound CAD and analyze it on the 15-minute chart for the top 20 patterns, the 30-minute chart for the top 20 patterns, the hourly chart for the top 20 patterns, the 4-hour, and the daily. Looking at pound CAD for one of the top 20 patterns and then writing it down. How long would that take? Well, you know, like I said many times, that's 7,500 charts. I don't think you could do it in a day. So if you're doing it by hand, it's like you're trying to do complicated math with an abacus. And you're like, I don't believe in computers. So I'm going to do it one at a time with an abacus. At some point, it's just a bad decision. You're choosing to make a poor decision. So with traders.com, you do look at all 7,500 charts. So then you're like, but Wayne, there's only a dozen or two, times 4, right? How many is here? 1, 2, 3, let's say 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So let's say 20 times 4. Okay. So in the entire universe of Forex, if you only trade the most reliable top 20 patterns, Out of well, not all seven. So out of thousands of charts, guys, there's less than 80 opportunities that are worth you even considering. 80. Less than. Because this last page is probably not full. Yeah, there's only 2. So there's
Tech drives
60.
gains. Google and Amazon soar. Semiconductor sector mixed. US S&P Global Services, PMI 58.5 versus 55.7 expected.
All right. So I want you to seriously think about this. Out of all the thousands of charts on all time frames on Forex, there's only 60 that are worth your consideration. Even of the 60, most of them are not opportunities you probably want. Thousands are not worth your time. What's one of the major mistakes amateurs make? They're not watching the right thing at the right time. The second one, of course, is they don't even know why an asset would move up and down. That'd be fundamental. They don't understand economics. But let's just get back to the basics. Most of the analysis they do would be a waste of time. They're looking at the wrong thing. They're staring at the wrong asset. And, you know, when you do that, when you just go looking for trades, you're going to find trades, right? Does anybody here have problems finding trades? Probably not. But how about you only traded reliable, repeatable patterns, and your timing is impeccable? So, for example, I don't start my day looking at pound CAD. But what we see is strength and an opportunity to go long. And I wouldn't have seen that. And it came out an hour ago. I would have missed that. I would not have seen this. Because if I was doing this manually, I might have been staring at like a euro dollar chart for a half an hour going through all those time frames, and I would have missed this because I'm not a cross-pair trader. But the interesting thing about this is the way I teach it in our training courses is that when you lack trend, so when the trend is sideways, okay, not up or down, that's typically when cross-pair patterns appear, and you find them through relative, that's an R, relative strength exercises. How many people here can confirm that that's what I teach you? That's the only time I really am interested in looking at a crosspair. Can anybody confirm this? Confirm. Thank you. Can I have someone second? Yeah. Yes. Okay. Cool. So this makes sense to me because I do believe we're in a sideways market. And I predicted that in last year's annual outlook that 12/12 would see consolidation. 12/12, December 12th, which was last week. And now when I look at the Commitment of Traders report, I can confirm that that's what seems to be happening. I don't guess. Cool. So this makes sense to me. Oh, a crosspair. Yeah. Cool. Opportunity. Yep. Is it going to work? Well, that I don't know. But the opportunity makes sense based on market conditions and the time of year. The second thing is that is technically an uptrend. There is no doubt about it. And buying at the bottom is a good process. I don't know what the outcome is, But that's a good standard operating procedure in these market conditions this time of year. So if I bought low here, it is impeccable timing. It's a solid repeatable pattern. And if I lost money, it's a good loss. But you know what it did? It probably saved me an hour of work, and instead of staring at euro dollar, I could have been staring at pound CAD trading this. Imagine the power of trade this, not that. There's thousands of things that are not worth your time. There's less than 60 things for you to check out, and you can very quickly go through this, and in your mind, you should already know what you're interested in doing. So I don't know if you're a bull on a pound or a bear on a CAD. I can tell you I'm more bullish on pound than I am euro, and I'm a bear on a CAD. I'm a bear on a Swiss franc. So when I go through this, instead of going through all the charts, I start here and I'm like, that makes a ton of sense to me. That makes a ton of sense to me. So I put that on my hit list. I didn't spend an hour and a half looking for this. I've automated the process. Now, am I in love with
U.S.
buying?
dollar turns positive with big beat on services PMI release. U.S. S&P Global Manufacturing PMI declines to 48.3 in December. Services PMI improves to 58.5.
Okay. Am I in love with Euro CAD? No, I'm bear on CAD, and I'm pretty much bearish on Euro. So I look at this and I'm like, I understand the opportunity and I can consider it, but I think it's going to have a mediocre result compared to the pound. Why? Because I've analyzed this fundamentally and I have a bias. So I'm smarter than the pattern, in theory anyways. Is this a pattern? Oh, it's a pattern. They're all patterns. They're impeccably perfect technical analysis. Imagine your technical analysis was impeccable. You never made a mistake. Doesn't guarantee you an outcome, but you're not pissing around doing mediocrity. This is perfect. You have a full-time technical analyst who's amazing. But then you're like, well, I don't love the euro fundamentally. So I think it's going to have mediocre results. I probably won't do it, but the pattern is legit. If I get long a bunch of things against CAD and I run out of things to buy against CAD, then I'll come back to euro. Like, you know, it's like what the Terminator said. I like you so much, I'll kill you last. I think that was Terminator, right? So, I'll do this one last. It's a giant maybe. Now, what about Euro Swissy? Okay. Well, this is interesting because to me, this is about the Swiss National Bank. I know they want a weak Swissy, and I know they eyeball euro. It's all about this. Switzerland, the Swiss National Bank, might actually buy euro directly. Convert Swiss franc, weaken it, and buy euro and strengthen it. So I'm like, I don't feel like this one, but this is interesting. Maybe I like the narrative better. Okay, same trade, higher time frame, great. Euro Swissy, same trade, higher time frame, great. What about Euro Kiwi? Again, I'm not in love with owning euro. In my humble opinion, France lacks a government and Germany now lacks a government. So I don't want to own euro. And especially if dollar gets strong, euro's coming down in a blaze of glory. So right now, this pattern exists. There is a rising wedge. There's no mistake. And if you were going to trade it, okay, you'd go this way, right? Yeah. Am I bearish on Kiwi? Yeah. I've analyzed the Commitment of Traders report. I can tell you, other people are bearish too. That's how I made my bearish decision. All right, cool. So do I put this high on my hit list? What would Bugs Bunny say? Yeah. Maybe later. Euro Rand. Okay. Dollar Rand. And it says up to me. Up. I don't want to do that. All right. How about USD Rand hourly chart? That says down. Maybe. What it's saying is it's breached a little bit lower than the supportive line, but here's what it really tells me. This tells me indeterminate. I can't tell reliably whether this is bullish or bearish. So it's saying this recent candle broke below the red trend line, the support trend line. But it doesn't mean it's going to crash out of the apex to the downside. It's just potential. But I can't use this to be bullish or bearish. So the way I play these is I say, well, I can only sell this. So if it does this, then I'll catch the next pullback. So I'm not in, so I'll pass on that. So right now, I only have 60 charts and I've already denied 2/3 of them. Euro Aussie, yeah, maybe not in love with it, but I get it. Maybe. Euro CAD, well, we've already looked at that on multiple time frames. Fine. What does this say? Kiwi dollar down. Did you know that? A 3 drive emerging? Yeah. So it could have a good day and then we take it down. The way that I've taught you this is that it's not a 1 hour chart. Chris, I've had as much as, 125. With 100% available margin. So let me preface this just to be open. Colombia retail sales year over year above forecasts, 4% in October, actual 9%.
US dollar Canadian dollar stretches higher and is testing a swing high target from 2020.
All right, so let's preface this so you don't lay an ostrich egg on me. All right. How do you get to 100 trades? Maybe this should be like a lecture or something. How do you get to 100 trades? First of all, you have to have the intent. If you don't know you want to do it, it ain't going to happen. You have to make a very strategic intent to build and construct a portfolio. The second thing is you really need to know, if not fundamentals, you need to understand economic conditions and the monetary policy of the central bank going forward. Meaning, you need a year in which the central bank is consistent. So let's say a year where they're consistently cutting rates, or a year they're consistently raising rates, or a year where they're consistently paused. Okay, so you need a good fundamental outlook. You should understand some seasonality as well, because most of the trades you're going to hold sort of 4 or 5 months at a time. And then there's usually a reaping. And some of them, many of those original trades are gone, right? But some of them survive, and it's just normal seasonality, right? And then there's a process of rebuilding. So a second crop you sow at a certain time of the year, right? So you sow your seeds twice a year, and there's at least one harvest, but probably for most things 2. So there's seasonality. Okay. But when the market conditions are perfect, and there have been years like this, much of your trades that you took in January, you would be taking profit in December. Not often, not always. Those are very unique years, but they definitely happen. But you have to have the economic conditions and stuff like that. Is it typically the first year of a political cycle? No. Is it typically the fourth year of a political cycle? No. So you need to, have politics, right? Fiscal policy lined up. You need to have monetary policy lined up. But those things do happen. They do. You just have to know to what degree you're at priced for perfection versus, pretty good versus okay versus neutral versus, risky and terrible and recession. And you kind of have to understand all that, right? Yeah. Okay. So you start with that. The second thing is you need patience and discipline. And you don't say things, yeah, I'm patient. Yeah, I'm disciplined. Yeah. Where's the trade? No, I mean it. Like, there will be pullbacks, and you need to be very logical, very intelligent, very disciplined to do what is right. Sometimes that's discipline means getting out on pullbacks, but you'd be shocked. The hardest thing to do in Forex is get out of a winner. And all these things like discipline to get out of a loser, but discipline to get out of a winner. These are paramount skills. Paramount. If you can't do it, you just can't build. Okay. Then you go to the third thing, and you have to understand things like correlation and seasonality so that you can construct a portfolio. So based on market conditions now in the near future, will dollar be strong or will dollar be weak? Will Swissy be strong or Swissy be weak? The yen strong, the yen weak. What about pound versus the euro? What about Kiwi versus the Aussie? What about CAD? So on and so forth, right? You really have to have some A game there. Because if you get it right, you can let your winner run. If you get it wrong, they're not going to run, you see? So now you're like, okay, it's a little complicated. Yeah. So if you don't have things like traders.com, you don't have a hope. Like, you're just not going to be able to do it. Because the professionals that do it, they do have quants. They do have fundamental analysts, right? They do have technical analysts. They are running scenario algos. They are paying $2,200 a month for a Bloomberg terminal. They do this. And that's why they're worth millions. And of course, most amateur traders, they don't do any of that. And then they wonder why they don't know how to build a portfolio. Well, they don't know what the heck they're doing. They don't understand, as an amateur, you're a liquidity event for a professional. You're going to buy them out when they dump their position. So anyways, let's get back to this. So you got all of this, which means you better have some kick-ass research. You know what the heck you're doing. You don't guess on things like, what is the Bank of Japan going to do? You know what the Bank of Japan's going to do? The meeting this week, they're going to pause. The meeting in late January, they're going to raise interest rates from 0.25 to 0.4. I already know this. And there's a high probability I'm right. I've consumed the data. I have the data. So anyways, let's go back. So you got all of this thing kind of worked together, and you're opinionated. We call this bias. Okay? You have to be very opinionated, and you know precisely why you're right. But you also know when you're wrong. And that's technical, not fundamental. All right. So now you move on to like part 7, and you haven't even made a trade yet. The intent is you buy and you hold for months. Like I said, it might be 4-ish months, or it might be all year, depending on conditions and if conditions change or not, depending on how it goes. So how do you analyze how it goes? That's where technical analysis comes in. Okay, great. All right, so let's say, I'll give you an example, okay? Let's say for 2025, I say the dollar is going to be strong. Okay, well, there are times in the year where the dollar will not be strong. But if I'm correct, more often than not, the dollar will be strong, if I'm correct. So what if over and 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 over, I consistently and reliably buy dips on the US dollar? So like this Kiwi dollar trade, yeah, I'm going to sell that pullback. Okay, then I drop a stop. And then I move on.com. Okay, and at some point, maybe in a day or two, I can move my stop to break even on that trade. So my day trade is now turning into a swing trade. Well, if I get this right, and I am correct on the direction of the US dollar, I could be long a month. Well, this is where I'm starting to use weekly and monthly pivot points, right? But ultimately, I can just leave my stop loss at break even and let it run. Meanwhile, I sell Aussie US dollar. I buy USD CAD. I buy sell pound dollar. I sell euro dollar. Okay? And I go around the block, as I call it, right? Now, all in one day? No. Okay? No, not all in one day. But if, let's say you do 5 trades a day, okay, so maybe, and then the next day, you get the pullbacks. And the next day, you get the pullbacks. Each time, every time, you drop a stop, and as it moves towards, profitable, or once it's in profitability, let's say up 100 pips profit, you jam your stop at break even. And you rinse and repeat, rinse and repeat, rinse and repeat. Now, does it go up, 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 or right, dollar strength forever? No, because we know there's lots of pullbacks. So what could happen is you can lose 30% of the trades on pullbacks. The most recent trades get knocked out. The most recent trades get knocked out. The most recent trades get knocked out. But then the trend takes over again. And so let's say euro dollar starts to fall again. And then you start rebuilding those positions. Chris, I wrote an entire chapter in my book answering that question. It's called The Greenback Guru. Okay? So you see it as risk, basically concentration risk. Yeah, I don't. Now, first, every single trade has its own stop. There's one in heaven. Yeah, St. Peter's got a copy. Yeah. There's one at the Library of Congress. And there's a few on Amazon.com. Yep. It's called The Best Frickin' Book Ever Written by Wayne McDonald. Yeah. Strategic and Tactical Forex Trading. Yeah. Yeah. Oh, yeah. I wrote it like 100 years ago. I wrote it on scrolls. Okay. Anyways. Colombia retail sales year over year above forecasts. 4% in October, actual 9%.
US dollar Canadian dollar stretches higher and is testing a swing high target from 2020.
Gold prices poised to test record highs in 2025 on geopolitical tensions, says ANZ. US dollar turns positive with big beat on services PMI release. US S&P Global Manufacturing PMI declines to 48.3 in December. Services PMI improves to 58.5. Oil prices edged down on soft Chinese spending data. Tech drives gains. Google and Amazon soar. Semiconductor sector mixed. U.S. S&P Global Services, PMI 58.5 versus 55.7 expected. United States S&P Global Manufacturing PMI came in at 48.3, below expectations 49.4 in December.
United States S&P Global Services PMI registered at 58.5 above expectations, 55.7 in December.
You see how cool that is? While you're trading, you're constantly informed. So at the 15 and at the 45, you get updates. But meanwhile, the headlines come in minute by minute. And so you're always updated. All right, so let's go to the next part of this discussion. So every day you enter your trades. Every day you put your stops on the new trades because the old trades are already at break even. So you're never risking any more pips than the new trades. The old trades you can't lose on. Now, as these build up and you get to your first, 15 trades, you want to look at them as swing trades now. The first ones now are swing. The second ones and the third ones are day trades still, right? So what I'd like to do to remain emotionally benign, okay, what I would do was log into my trading account on the weekend. And I would move the stops on the most profitable trades by 15 pips a day. Because in the book, I talk about a minimal acceptable performance. So you lock in 75 pips, something like that. Maybe you only want to do 50, but whatever. You lock in some small profits on all the earliest of trades. Only the earliest of ones. And you do that over and over and over again. So by the end of week 2, you'll log in and you move 50 to 75 pips on the first trades. So now they're up 100 pips profit no matter what happens. But the second tier ones, you lock in 50 pips profit or 75, whatever you feel is right at the time. But about 15 pips a day, right? 10 to 15. And you just move them a little bit. So why only do 10 pips a day? Well, I don't want to get out of the trade because I've analyzed this situation and I have a long-term vision. Okay? So every time there's a significant pullback, however, let's say you have a down month, so dollar weakens for an entire month. That's probably seasonal, right? Well, you'll lose some of your newest trades, and then you'll get knocked out at break even. And of course, some of them are going to lose money too, but you only lose, 50 pips on a trade or something? So you're going to have, at the end of, let's say, 6 months, you're going to have lots of break-even trades. And you're going to have, a reasonable number of losses. But they're all small losses. The number of losses might be high, but every single one of them is small. Because if you're wrong, you're wrong. You know you're wrong. You never increase your stop distance, right? So it's always defined. So in fact, as you run into the seasonality challenge, or if you run into technical resistance, or support, you can move some of your stops on your most recent trades from, let's say, negative 50 to negative 25 because you see the threat. It's not like you have no idea the threat's coming. You just don't know the velocity or magnitude, but you know things like seasonality, or the pivot points. Like, you just know this stuff. It's not surprising. So you can do some risk management. But the thing is, you're going to have lots of break-evens. And some of those were up 100 pips. You moved them to break even. And they came all the way back. Yeah, that's terrible. Sucks. But you didn't lose money. And some of the newest ones, you might You might buy it on a Tuesday and it collapses, and you're like, oh, dang it, right? And so those are your losses. But this is why you get to 100% of your available margin. It's not that you have 100% winners. It's that all your losers are break even or small losses. But your original trades are open. Now, this takes patience and discipline.
Dogecoin price prediction. Doge extends losses despite Bitcoin rally to new high.
Okay, takes patience and discipline. So you have to have strong fundamentals, you have to have strong technicals, and you have to have a strong constitution. Yeah. And then on the pullback, when the shorter time frames turn bullish again, or bearish, or whatever the direction is, you start building your basket again. Seasonality really helps too, because sometimes, and this might go back to Chris's question, like, why all dollar? Well, often what it would be is, okay, dollar throughout the year because it's a reserve currency, but then there's a certain time of year I start building baskets on yen pairs. And I can run those 3 to 6 months. So there's a period when it's yen season. And there's some seasonality to dollar as well. So it may not all be that thing, but what I'm trying to get at is, like, how do you get a 100 open trades? When you make 1,000 trades and you get out of all the losers and all the break-even ones. The mediocre trades are removed, the bad trades are removed, and you let your winners run. Right? So to get 100 winners, you need 900 losers and break-even trades. But the thing is, your winners, they could be 1,000 pips per trade. And you're like, well, Wayne, that would be 100,000 pips. And you're like, yeah, okay, they're not all going to be that way. But what about 10,000 pips in a month? What about 20,000 pips? Well, the secret is, yes, 10 to 20,000 pips in a month. Yeah, but here's the thing to it. That's the month you take profit. Okay? Yeah. Yeah. But you have to think different than a retail Forex trader. We used to do something at FX Bootcamp where you were given an examination after a training course, and to pass the training course, you had to make 10,000 pips in a month. How many people here have taken and passed that examination? Anybody? That was quite a while ago. That was probably 8 years ago. It was demo. Yeah. So what we did was we had you pull up a simulator that used real data. We had you go to a certain period of time in which we knew it was possible, if you know how to trade and if you know how to follow the rules. And we taught you all the rules. Do this, don't do that. Do this, don't do that. And so we know it was possible. And these things can happen. So imagine, like, throughout a yen season, right? And if you made 100 trades and the yens in that period moved 1,000 pips each, okay? Yeah. Really, Denise? I thought maybe you were part of that group. It was something that Jessica wanted to do, and so we hired a Russian programming team, and we had to integrate a whole bunch of technology into MT4 and all that kind of stuff into their platform, and we had to have the data and all that kind of stuff, and then we had to integrate it into the data. into the database, so it was very expensive. But it was a neat process where you went through the training course and then you took the test. Yeah. But, well, obviously many people passed the test. But the thing is, the point that I wanted to make here, but even back then, is that as an amateur retail trader, you don't even know that that's possible. In fact, you're convinced it's impossible. You're convinced, I'm a salesman selling you some dream. No, it's just you don't know. If you knew, you might do some research. You might change your focus. You might, it might open your eyes. Like, I just want to know, and then I can figure it out from there, right? Like, just tell me, is that the way it works? It's the way hedge funds work. Doesn't matter, Chris. I can use either. I can use both. I can use none. Okay. Yeah. Oh, so Ashish and Jim, you both did the 10,000 pip challenge? I think some of you got like 12,000 pips.
Gold prices muted before Fed rate decision. Dollar in spotlight.
And really all it was me teaching you what I just taught you now. Or in this case, Jessica teaching you what I just taught you now and then actually doing it. And the idea was to just blow your mind. And you say, oh my God. Once your mind is open, you become coachable. And it's difficult because you're 100% certain that can't be done. And that's my challenge as your coach. You're 100% certain that that's impossible. And that is one of your major problems. Because you were taught by, idiot YouTube gurus. Yeah. But we have to break the old psyche, right? Chris says, pound CAD, solid call. No, it's just a pattern. There's no call. It's just a pattern. Okay. And so we can go all the way through 7,500 charts. And pretty soon, if you only focused on good things that are actually happening and stop wasting your time looking at things that are worthless, okay, you're going to be a better trader. Are you trading, okay, daily here, okay, daily here? Look at these opportunities. Yeah. Look at this. Look how gorgeous these opportunities are. Falling wedge breakout. Do I care? No. No, I'll skip this one. Why? Because I don't trade those. I don't like them. What do I like? Up, down, and then I'd buy. Cool. Nice. See? So now all of a sudden, like, I can burn through all these charts in just a few minutes and I can create a hit list like, okay, these Kiwi pairs, these pound pairs, these dollar pairs. Cool. Right on. And now I can just focus the next hour on things that already have patterns that I like in the direction I want. Imagine every single trade was like this. How amazingly consistent will you become as a trader? I don't know, but maybe you prefer randomness. Every day you're just guessing. I can't imagine that feels good. You're like, I don't know what's happening today, so I'll wait for some sign. I can't imagine. You can't build a career on that. Oh, Bitcoin. Yep. Okay, yep, on multiple time frames. Ethereum, ooh. Bitcoin on the 15, yep. Ethereum, like I said, it's a, right? If we're to analyze this doing SWOT, this is weakness and a threat. But the next pattern might be higher high, higher low, and then that becomes an opportunity as the pattern has changed. So, right? I'll catch you later, Ethereum. If it changes direction, then I will buy a dip. Okay? You will become very consistent if you have the right tools, the right coaching and support team, and a ridiculous, sickening work ethic. Okay? The secret to getting rich is working your ass off. And sorry, honey, it ain't going to happen fast. So, do I think is a good time to look at gold again? Well, I don't think. I look at the daily pattern on the chart. It's non-directional, but it did try to break. So there lacks trend. It's not bullish, but it's not bearish either. It did break to the upside, and it did pull back. So I could try one of these, but it's just a pattern. Yeah, well, Chris, yeah, you can gamble your way, sure. And some people do, but those people usually don't stay rich very long. Money is a science. Yes, you can make money through the art and magic of various
U.S. dollar
things.
gains, with U.S. services PMI outpacing Germany's positive print. China, growth normalized in November, Standard Chartered.
EU adopts new Russia sanctions targeting China. Shadow fleet.
But if you want to engineer wealth, you start with a certain amount of money on a date. Okay, that's your starting point. Money and date. And what, okay? The second part is your rate of return. And if your rate of return is based on low risk, consistent returns, because there's low volatility, cool. Then the rest is just how much time. Okay? And it becomes easy. Because it becomes engineering, not magic. So you can, like in finance, for example, somebody could say, hey, Wayne, how much is this apartment building worth? And I can do the math and tell you to the penny. Cool. So if you start with $10,000 and you have 30 years to invest, and you have low volatility trades that produce, right, investments that produce 7% a year, okay, your money doubles every 10 years. So in year one, you start with 10K. Okay. In year 10, that 10K, the first 10K, is now 20K. Okay. And in 30 years, that first 10K is now 40 grand. See, this is how I love math. So you start with 10,000 and that 10,000 is now 40,000. And then you rinse and repeat for year 2, year 3, year 4, year 5, year 6, year 7, year 8. Okay, over and over and over again. Cool. Now, if you're going to try for 17%, now you got to take on more risk, and you're going to have some years that are 20, but you're going to have some years that are negative 10. And that's called volatility. And that's usually a bad thing. But you do kind of want more than 7 because you also have to account for inflation. So what if it was 10? Then instead of every 10 years it doubles, then in every 7 years it doubles. If it's 12, it's every 5.5 years your money doubles. Okay? So if you're doing stuff like this, now 12 is heavy, but what did I do this year in my portfolio in cash? I think it was 11.3. That's just cash, not asset appreciation. Oh, so it's plausible. So every 6 years your money doubles. So now it's just like, well, how much money and how many doublings? Okay. Well, I'm working on that, Chris. In fact, yeah. This time not a hedge fund. And this time not a managed futures product. This one would be an SEC product. So, but that's the thing, right? So like, once you get to this level, if you know how to do this part, the 11%, or let's say even 10%, if you know how to do that with very little risk, now that's not an easy thing to do, but if you know how to do it and can execute that, then everything else becomes boring. Now you might say, oh, well, my Tesla stock is up 100% this year. We're up 50%. All right, cool. Right on. Good for you. I've been around where I've seen these stocks drop 50, 60%. Will it happen? Oh, I don't know. Probably. But I don't know what the future is. So should I have bought Peloton stock? It went up 100%. Yeah, well, it dropped 90. Like, I don't know. Like, is NVIDIA going to be the best thing ever? Like, well, what happens to NVIDIA when it stops doubling every quarter? Is it going to happen soon? Are we at a period of capitulation? You're like, look, I don't know these things. But these are risks. So you might be doubling your money this year and then losing 50% of your money next year. Well, you can't live on that. And if you're a hedge fund, Chris, yeah, everybody loves you this year and then you lose all your clients next year. So what's the frickin' point? So the way I like to look at it is, what if you got this to be very tight? Like you seem to always produce about this much with very, very, very little risk. You know, you can do a calculation. Let's say you start with 100,000 this year, and on the day you retire at age 70, it's $3,652,552.76 about. And you're like, that's enough. Okay? And then you move to the next section, Chris. Okay? You move to, instead of taking the 10% return and compounding, now you're too old to work. You're like, I don't want to work anymore. And I'm like, okay, so let's say I'm managing your money for you, right? And I'm doing this. Let's say I actually can do it. I'm not making promises or stuff like, right? I'm just saying I did it this year, but you never know. Okay? Great. What happens when Chris is too old to work and Chris's account compounding for 30 years gets to $3,652,574.26. Then we move from compounding phase into income phase. So what does that mean? Okay, that means Chris could probably live on about, it's $365,000 a year. So $30,000 a month. Let's dumb it down. $25,000 a month for Chris. He's 70. He lives to 90. Okay? So 10 years would be how much? 25,000 a month, 365 times 10, back to 3,652,000. But he lives to 90, so he makes about $7,500,000 that he lives on for 20 years. And those are pretty good 20 years. But then he dies and he's dead. Chris has to put in his will what to do with this money because he's still, even though he spent $7.5 million, he still has $3,652,000 in the bank. So that has to go to children, grandchildren, his 3 pugs, or donate it to charity. And the thing is, people don't think like this, Chris. They want to flip a bunch of real estate and buy Lamborghinis and date Instagram models, and they're fools. Where I'm like, you can just engineer money. What's the problem? Because think about how your whole entire life changes, Chris. You're like, at the rate I'm saving, when I hit 70, I'll have $3,652,000. And then I can live on $25,000 for the rest of my days. And all of a sudden, you have no worries, Chris. As long as you stay on schedule, you live a worry-free life the rest of your life. And you're made in the shade. See, that's the way I look at wealth. That's wealth. Flipping houses and starting a business and all that. Okay, all of that is expensive. All of that is risky. Most people that start businesses, they don't even have a business degree. You're going to open a restaurant, but you don't know how to do accounting. You've never managed a staff of people. You don't know anything about taxes. You don't know anything about marketing. But you're a really good cook, so I'm like, I'm going to start a restaurant. Yeah, you're going to fail. I like working on cars. I'm going to start a mechanic shop. Yeah, you're going to fail. Well, there's more business I can handle. Yeah, but you don't know accounting. You don't know taxes. You don't know management. You just don't know how to do it. So, yeah, that ain't going to work. So what works? What's the world's greatest small business? Money! And what's the most powerful force in the universe? Compound interest. And the day that money makes more money than you can make, you become wealthy. So let's say you make $100,000 a year and you're saving as much as possible. There will become a time, not quickly though, but probably closer to the end of your career, where your money is making more money than you make.
2024. Octobroker looks at the year's biggest market stories.
Australian dollar US dollar sellers remain in firm control. What would turn that seller's control around?
U.S. stocks, mostly higher as traders, look ahead to Fed decision. U.S. dollar gains, with U.S. services PMI outpacing Germany's positive print. China. Growth normalized in November, Standard Chartered.
EU adopts new Russia sanctions targeting China. Shadow fleet.
Gold price is muted before Fed rate decision. Dollar in spotlight. Dogecoin price prediction. Doge extends losses despite Bitcoin rally to new high. Colombia retail sales year over year above forecasts, 4% in October, actual 9%.
Okay, so think of it this way. People that go out and lease a used Lamborghini, they're poor. They're poor. Things like fancy houses and fancy vacation homes and fancy cars, for example, or jet planes. I know people that are rich enough to have their own jet and their own yacht. You know, the secret is that stuff is cheap or free for a wealthy person. A rich person spends money on it. A wealthy person makes money on their vacation home. They make money on their assets. The Lambo is free. And when you go to a bank and you're wealthy, shoot, the bank lowers the rates and basically begs you to borrow the money. Please take our money. And you're like, I don't know. Where poor people have to borrow and beg to get the cash. They pay higher rates and all that kind of stuff. And they lease their Lambo. Well, they're paying $9,000 for a Lambo used. Can't afford the $100,000 tune-up. Meanwhile, a wealthy person gets their Lambo for free. Okay? Yeah, you don't want to be rich, but you want to be consistent. Right? You don't want to be rich at 70. You want to start a fund and get rich by 30. Yeah, no, that's not even the right way to think about it. See, Chris, when you start a fund, you're there to serve other people's interests. If I managed your money, Chris, I am your servant. I'm not going to do it to get rich. And you got to be careful because people with money will smell that. And you will not acquire assets under management unless it's friends, families, and fools. But even the attitude of well, can I get rich by 35, 40? You know, the attitude of it, and I don't mean this in a mean way. I've just seen it a million times. In time of duress, it will play against you. Yeah, you'll make a lot of money when the markets are easy. The market gets tough. At that point, your bias is off. Your intent is off. Your pride is off. Because your pride is based on getting rich, not protecting capital. And so you'll make a lot of money when things are good, and when things are bad, shit will hit the fan, your boat will sink. And it's not you. I've just seen it a million times. So if you go in as a servant, and that's how I look at it. Okay? If you give me money, I serve you. Your best interests are what I provide for. Okay? And so, don't worry about it. Yeah. And the reason I can do that is, even just for all my own accounts, and including my retirement accounts, I can do the math. Just like I did for you guys. So imagine if I knew, as long as I stayed conservative, as long as I stayed patient, as long as I stayed disciplined, I'm going to have more than enough money when I decide I'm too old to work. I'm going to have more than enough. I will have excess. So mathematically, Chris, if I felt that way and I could prove it mathematically, then I'm already rich. So now I don't need to do it quickly. I've already done it. I just need to stay on the course. Stay on path. And if serving you now, Chris, keeps me on my path to go from rich to wealthy, then I'm okay. I don't need gambling. It's nearly, I mean, it's not a sure thing, but it's a thing. You know, it's real. Okay? Okay? Well, Hope, you can't
Labs and Stanford
you can't save
University's
everything.
FDCI to explore AI agents' impact.
But we do know most people don't save enough, right, Hope? Also, there's a game to it, at least in the United States. So if you have a job, okay, that's good. You have stable income. You want to max your 401k, then you want to max your Roth, and then you might want to pay down your mortgage, and then you go back to your 401k, because the choices in 401k are pretty pathetic. But there is a game to it. But if you are an entrepreneur, so you're an LLC, there's a great way. I mean, you want to become an LLC just so you can get that huge home run. So if you make some money, let's say you make $300,000 a year and you're an LLC, oh my God, I got it for you, man. We'll take you. So you might say, well, $300,000 is a lot of money, I guess. But here's the thing, it makes you rich. So what do? You go out and buy a car, right? You go out and buy a house, and you get a regular mortgage, you get a regular car lease or whatever people do, and you spend money on vacation, so you pay money to a hotel and all that kind of stuff. But you never become wealthy because you get compensated for the work. You get compensated for the time. If you become an LLC and all that kind of stuff, and you follow like a strategy that I use, what'll happen is you'll go from rich to wealthy. Yeah. And for example, you can use that money to buy a house, not just a retirement account and all that kind of stuff. And if you own vacation property, that brings in cash flow from, renting to Verbo and what's the other one? How come I can't think of it? Anyways, the weekend renters, what the hell? I can't think of it. And then you use it for yourself, and then meanwhile it's appreciating. You're renting it out, paying the mortgage, all that kind of stuff, and all of a sudden your vacations are free. And 20 years later, you sell your house, your vacation home for a profit, because it was amortized by the renters and it appreciated over time. And then, of course, you used it and you didn't spend money at a Ritz-Carlton. You didn't spend $1,000 a day at a Ritz-Carlton. You owned your own and that kind of stuff, right? And so then you sell your vacation home and you make $500,000 profit, and then you buy your Lambo. Well, your Lambo was free because the renters amortized your mortgage on your vacation home. And so you got to vacation for free, and then you dumped it, and then you bought your Lambo for free with other people's money. Opium. So vacations for free, your Lambos for free, all this kind of stuff. Your money just makes more money, keeps making more money. Rich people spend their money and they die broke. When they die, they might have made $10 million in salary, but when they die, what happens? They leave 10 grand to their kids and they die basically broke. A wealthy person, when they die, they still have their life savings. Okay. Well, that's the thing, Chris. Like, look, if you think you want to make 100 million, that's a whole different game. But the thing is, people that often dream that way, I'm like, okay, cool. So you got education up the yin yang, right? So where'd you go? Harvard, Yale, Princeton, Stanford. Where'd you go? Like, I ain't got no education. Oh, so you don't know how to use a spreadsheet or how to business plan, or you don't understand finance? You can't perform a cash flow statements and stuff? No, I can't do any of that. But I'm going to make $100 million. Like, dude. Yeah. And right? So it's like, no, that ain't going to happen. But can you run a small business? Yes. Can you learn some of these things, even though it's not like Harvard degree stuff, but can you learn it and do it? Yes. Yes. And do you have to be a degenerate gambler? No, I know lots of people that own like sheet metal businesses and have 10 million in the bank, but they owned the sheet metal business for 30 years, 40 years, sold it. So once again, I think it's very, very rare that someone makes money quickly.
Will the Fed cut interest rates again, and why is the dot plot important?
Forbes Web3 celebrates innovation. Legacy Pass members showcased in the Forbes magazine.
German's Chancellor Scholz lost no confidence vote, paves way for snap election.
See, that's the German collapse of the government I just talked about. So Olaf Scholz's no confidence has gone through, but that was by design. And so now there's new elections, and Germany doesn't have a government. France doesn't have a government. So anyways, guys, I just want to point out there's a difference between rich and wealthy. And I think if you want to die with a smile on your face, the easiest way, let's say, the most direct way to do that is have more money than necessary when you're too old to work. Now, that doesn't mean you have to be driving in limousines and all that kind of stuff. But if you can live a dignified life without stress, and know that when you die, your life savings is left to your legacy, your children, your grandchildren, your charity, your church, your community, but your life savings has legacy. Your name, your family has legacy. Imagine all your grandchildren have their universities paid for. Imagine all your grandchildren had down payments to their first house because you were able to provide, because you still have your life savings. Does it change the direction of your lineage? Yes. It's very powerful. And it's, I think, more powerful than get rich quick. Because what you'll find is it doesn't work. Yes. What you want to do is get wealthy. And that is to make income and invest it with intelligence, with the lowest risk possible, and have a long-term vision. Now, if it's not like investing in the capital markets like I do, I would still want you to do something similar to what I do. And that would be like find a way to buy an apartment building. And over time, the value of the apartment building is going to go up and down, up and down, up and down, up and down. Okay, whatever. But you're never going to sell. So it doesn't matter if it goes up and down, up and down. The renters are paying the mortgage. The renters are paying the insurance. The renters are paying the gardener. The renters are saving to replace the windows and paint the walls. And this is all done with the renter's money. And at the end, The rest is for you. Cool. The problem is, talk to anybody with real estate. It's a pain in the ass. But nonetheless, you can collect rent month after month after month and for month forever and ever and ever and ever. And you want to be able to collect enough rent to live on. Cool. So you can do that through financing, an apartment building and owning it and maintaining it and doing all the work. But you can also do it in the capital markets and have no work. Right? Let's say I'm trading your money. Well, I'll do the work. My team will do the work. Or you could just, you're not going to make enough money, but you could just own treasuries, and what does it do? It just pays you, right? So, but the thing is, it doesn't pay you enough. So, okay? So there you go. Hope says, yeah, you don't need shallow cars, but you know what? Fancy cars, it's shallow. It's true, but at some point, a car shouldn't even be that big of a deal. It shouldn't be a big deal, right? So I have very fancy cars, and you know what? They're comfortable, but they break too, huh? So the bottom line is, I like the financial markets more than real estate because I can get the same returns or even better with probably less risk and less work. Yeah, I know exactly what to do with that. So imagine in 6 years, Chris, it was 200,000. In 12 years, it was 400,000. Yeah, in 18 years, it was 400,000. Okay? And in 20-something years, yeah, you're getting pretty close to $1 million. Yeah, not a problem. And I do it with less risk than the stock market. So I can't tell you, right? I can't promise that to you because obviously all kinds of things can happen. But I think I could do it in a down market as well as an up market. The best market would be a sideways market. But the thing is, it's in financial engineering. It's very possible. The number one thing is to lower risk, lower volatility, lower your beta, have a high Sortino ratio, and have your Sharpe be adequate. That means very safe, very boring, very consistent returns. And the only other question is for how long? 10 years, 20 years, 30 years? Okay? Yeah. Well, that's how the Wayne do. That's how I think. And honestly, that's how wealthy people think, by the way. Yeah. I even learned this in the Middle East where someone was going to give me $100 million. And it turns out he spreads money around. He gives a lot of people $100 million. So how does this work? So let's say it adds up to $1 billion. So let's say he has 10 investors with $100 million each. There's $1 billion. They all, on average, as an aggregate, because they trade in different things, so that would bring the diversity, or diversification. Let's say on average, everybody produces 10%. Okay? So this guy has to find a way to live on only $100 million a year in income, which is enough to finance the jet, finance the houses, right? Finance the yacht, finance the crazy vacations, finance all the cars. $8 million a month. And they budget on that. There's the accounting and everything. And that's how I learned how to manage nonprofits, because it's a very similar thing. You never trade or spend the principal. You never get high on your own supply. So you budget everything on the income produced by your principal long-term investments. So if it doesn't earn 100 million, let's say it only earns 35 million. Okay, that's how much he can use to fund his lifestyle. And he can live $35 million a year after year after year after year, and his billion or whatever is still in the account. And you'll be rich, well, in this case, wealthy forever. So once again, you look at it like you spent $2 million on a Bugatti? Yeah. $2 million on a car. Like, dude, I make $35 million a year, every year, forever, doing nothing. What else am I going to do with my time? I'll buy a Bugatti. It's only $2 million. Like, gee, it's like a week's worth of income. It's like a 7-day car rental for you. For me, I own a Bugatti, you know? So all of a sudden, like, it's different, right? So he buys a $35 million yacht, and it's equivalent for you spending $100,000 on a boat. Yeah. So the thing is, you got to understand. Okay? You just got to understand money. And the thing is, it's not taught. Okay? It's not taught. Money isn't taught. Most people don't understand money because you're taught to be a factory worker. This is what you're taught. Keep your mouth shut and work your ass off. Go to the factory every day, right? Go to the factory every day. Don't complain to management and work your ass off. If you want to make more money, work more hours. Yeah. Guaranteed poverty, right? But if you don't have the work ethic, forget it anyways, right? So anyways, I've gone too long. I'll get off the soapbox. But it's only money, honey. It's not magic. You don't have to be a rocket surgeon. It's math. It's science. It's engineering. Finance is the engineering of money. And it'll change your attitude toward life. Get rich quick? Why? That ain't going to work. It just doesn't work. You know what works? Math. Compound interest, time. If you got it all figured out, then there's no need for degenerate gambling. And you don't waste your riches on stupid things like cars, right, Hope? If you're wealthy, your car is free. If you're wealthy, your jet is free. If you're wealthy, that yacht, dude, whatever. Okay? But rich people spend their money on that, and when they die broke. Wealthy people, they leave a legacy for the future. And all you have to do is switch teams, everybody. Yeah, well, I don't know, Chris, because for that's probably not enough. And the other thing is, what's your Sharpe ratio, what's your Sortino ratio, and all that kind of stuff. Okay, and by the way, people won't invest in you, Chris, because of your numbers. So if I told you I could do 10%, and you're doing 7%, most people might just pick me, right? Yes and no. People invest into people. And so if they knew you and you had good street credit and they liked you, Chris, they could choose you over me, even though I produce more. But then also mathematically, and I do this in the training course too, in the stock trading course, which I think I need to re-release. But in the stock trading course, I show you two stocks. Which one's more expensive? Yeah, and you might find that I earn 10%, you earn 7%, but I'm riskier. And then when you do a Sharpe ratio, I don't compensate you enough for that extra risk. So you're right, Chris, your 7% might be better than my 10%. But it also depends on the profile of the person and all that kind of stuff. But the bottom line is there's a lot more to running a hedge fund than the numbers. And the trades are easy. So like if you don't know how to talk to wealthy people, if you don't know how to access wealthy people, if you don't know how to develop relationships with wealthy people, you might make your 7% a year, but you'll never get the 100 million. So that's another thing. It's like I said before, you're a good chef. So you start a restaurant, but you don't know business. You don't know accounting. You don't know finance. You don't know management. You don't know marketing. Yeah. What's the chance your restaurant's going to succeed? 0. Okay. Right on, Chris. Well, then you and I should talk. Okay. And the same thing is like you're a really good trader, so you're going to start a hedge fund. Good luck with that. Probably not going to work. Yeah. Probably not going to work. Cool. So I'll keep you abreast. I got some things cooking in the pressure cooker, Chris. So everything might be right as rain in the new year in regards to helping you with all of that. So anyways, peace on earth. May the pips be with you. May your profits be above average. Yeah. I'll see you when I see you. Good talk, everybody. I hope that was okay. Was that too preachy? I think some of you have heard it before, and you're like, yeah, I've heard it 10 times already, Wayne. That sounds great. But, yeah. It will go into a book if I ever get the time. You remember it? PRW, Poor, Rich, Wealthy. Yeah. See, like some of you, I was raised to be poor. Yeah. So I had to learn, right? My next step was to get away from poverty and become rich, which I did. And then the next thing I had to learn is how to go from rich to wealthy. And that's a process. But it's never taught, so I probably have to write it down and leave it for the world. All right, I'll see you soon, guys. Got nothing but love for you, but I got